Hello, trader. Gary Wagner here for Trending Markets. Approximately 10:40 in Honolulu, 4:40 in New York. Markets are closed for the day. Incredible activity throughout the day. And of course, as we mentioned on our opening statement in the gold forecast, we live in most interesting times. It's a Chinese saying, and I think it's appropriate when we have a day in which we are reeling from the effects of the Bank of China actually devaluing their yuan. Now, we saw the Dow Jones Industrial Average, which has been down in triple digits throughout the day, closing off about 212 points, actually trade to a low off about 262 points. Considering the fact that yesterday we had a dramatic rise of 242 points, we're looking at a 480-minute standard candlestick chart in which we have put our cascading channel lines. Of course, the bias has been to the downside. We effectively found support in the market yesterday as we hit the bottom of this channel line. We also closed at a tremendous high, considering we're up about 242 points, but we've pretty much given that back on today's trading activity. We came off of the lows on the day, but absolutely really gave back the majority of the gains that were achieved in yesterday's trading activity. Now, not to be outdone, tremendous fall in crude oil, actually hitting a low, I believe, of below 43. And as you know, we've had that mark at 43. Let's go ahead and pull this chart up so that we can widen it and take a look at our highs and lows. But when we look at the low that we got here, we are 42.69. So we have absolutely hit our target at 43. Market's at 43.33, and it's off over 3%, over 3.5% on the day. Now, where could this market fall to? Well, my sense is that a break below these current lows, and of course we're pegging these current lows right in the area of where we're trading at. Let's go ahead and kind of blow this chart up. And when we do that, you can see that effectively, in terms of where this market has closed, we are at the lowest point that oil has been to on a closing basis since this market has dropped. Now, these are weekly bars, so we could have hit a low below this point on a closing basis on a daily chart, but on a weekly basis, this is the lowest we have seen this market at. It's all about whether or not it closes in this particular area, because traders, a break below 43 really refreshes what we're looking at in terms of where we think a low could go to, and we're probably looking at about $35 per barrel oil. So we'll have to see how this unfolds, but this is absolutely an unexpected continuation of a sell-off. I thought that we might see a bounce in this area. We are seeing a continuation of the dramatic downside pressure that has been so prevalent in this market really since the mid of June, when we were up near these highs at 62 and started this dramatic fall from grace. Now, when we look at our currencies, interesting activity in the currencies, because what we noticed with the Chinese yuan devaluing was that at first it wasn't really moving the dollar up in any kind of substantial manner. Now, very, very small gains. Dollar is trading nominally higher. I'll address it as basically unchanged on the day, 97.20. Of course, in terms of where we're in at 97.67. So we're still behind the curve on this. And with this new wild card coming into the market, meaning the activity by the Chinese government and their banking system to devalue their currency, we could see some fluctuations. But as of now, we have seen really money moving into maybe U.S. debt and precious metals, specifically gold, as kind of a safe haven protection. The last thing we want to look at, of course, is the euro. Again, trading higher, but just nominally higher. I'm going to say in essence unchanged, trading at roughly 110.38. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review in trending markets. Bye-bye.